This week's specials from Miles Franklin are 90% silver dimes and quarters, only $2.75 over spot, backdated silver maples for $3.25 over spot, and pre-33 $10 gold liberties for $34 over spot. We have a massive inventory along with cheap prices. You can text, email, or call slayer@milesfranklin.com, and I'd be happy to help. Now let's get into the video. Here is today's headline for the silver price forecast. Silver remains on the defensive below $27.50 on easing Middle East tensions. Now let me ask you something. Do you think Middle East tensions are going to continue to ease on by and everyone just starts throwing white flags and holding hands? No. It's going to continue to escalate, which is going to push silver prices and everything right back up. Everything pushes and pulls precious metals prices to different degrees. Maybe the dollar index is 1% and stock market volatility is this percentage, gold is this percentage, Bitcoin is this percentage, the FOMC meeting or the week leading up to it is this percentage, and tensions, geopolitical fears and all that, fear, uncertainty, doubt. Everything is pushing and pulling things to different degrees. So we will cover this article, but I have to give more context because there's more than just Middle East tensions happening that's affecting the price. For example, this article that came out from FX Empire titled Silver Price Forecast, Silver Markets Break Down. Going into, central banks around the world continue to flood the markets with liquidity, which is one of the drivers of not only silver but gold to go higher. And since we're already talking about politics, why not also dive into just a chart breakdown forecast with some expected scenarios and some trading ranges to keep our eyes on as well. So I wanted to give the full wrap around so we have the best idea of what's happening, because you could look at this angle or that angle of silver or what's affecting the price, but if you don't look at all the angles, you're missing a large piece of the puzzle. So going back to this first article, it's talking about how silver remains on the defensive below $27.50 on easing Middle East tensions. Here are some of the key points. Silver price turns red around $27.30 on Wednesday, despite the weaker US dollar, which is pretty interesting because usually the dollar index and precious metals have a negative correlation, but right now times are crazy. You can't expect anything to be acting normal in today's economy. A relaxation in Middle East geopolitical tensions drags silver price to two-week lows. The rising demand for the white metal in industrial uses supports silver. And that is a good point to take note of, is even with something affecting the price, like things are getting better across seas or whatever, which would be affecting the price negatively, you still have other components, other factors that will hold the price up at these levels. If there was no silver shortage, if it wasn't used in industry, it would have kept going down. But there's other reasons that give silver an edge beyond something like gold that solely relies on a bad economy. Silver trades on a softer note near $27.30 during the early European session on Wednesday. The easing of tensions in the Middle East and the risk-on environment capped the upside of the white metal. Geopolitical tensions in the Middle East, particularly Israel and Iran, have boosted the price of precious metals in recent weeks. However, those fears have largely dissipated as Iran and Israel have signaled they are not interested in a wider war after attacks earlier this month. This, in turn, leads traders to reduce their precious metal positions and favor riskier assets, which is insane. It's so insane to me that people have to have something actually go bad for them to say, oh, maybe it's time to invest into something that protects my wealth. It's so backwards. They're waiting for a crisis to occur for them to then jump on board instead of prepare and be ready before it happens. It's so crazy to me. So anyways, furthermore, the robust economy and rising inflation pressures in the United States have triggered the expectation that the U.S. Fed might delay its easing cycle this year, which weighs on the U.S. dollar-denominated silver. Investors will take more cues about inflation trajectory and interest rate outlook from the first quarter gross domestic product or GDP number on Thursday and feel core personal consumption expenditures or PCE price index, the Federal Reserve's Fed preferred gauge of underlying inflation, due later on Friday. I know that was a whole bunch of word salad and mumbo jumbo, but basically what it means is pay attention this week because there's a lot of things that could affect the price. So, on the other hand, rising demand for silver driven by its industrial uses in photovoltaics, semiconductors, and electric vehicle charging, along with a significant deficit in silver supply, might boost the white metal for the time being. According to the Silver Institute, industrial demand for silver set a record in 2023 of 654.4 million ounces, owing to sustained structural gains from green economy applications. So there you have it. That's kind of what's happening, but there's also some other things happening that we're going to break down now. And that's why you got to make sure you're not getting all your news from one source. And that's also why you should be subscribed to me, because I will do all the hard work for you. So, silver markets break down. Silver markets initially tried to rally during trading sessions on Monday, but found trouble at the 50-day EMA again. This is an indicator that suddenly is starting to offer more resistance than it has in the past. And it should be noted that the US dollar got a sudden surge of momentum as New York came online. If that is the case, we would continue to see a lot of downward pressure. That being said, I am bullish of silver over the longer term, but I also recognize that getting a good price is crucial. That being said, the market could very well find itself at $22.75 level again. I do not think that is possible. I think let's hear them out first. So, and that's the 38.2% Fibonacci retracement level and an area of support recently. After that, we found the 200-day EMA coming into the picture at $21.80, which of course will attract a certain amount of attention. After that, then we start to look at the idea of $20 level. Regardless, I do not have any interest in shorting silver. I think if you are patient enough, you can wait and find some type of supportive daily candlestick to get involved in much more supportive areas. So before we go into what central banks are doing to push the price up, or what they will do to push gold and silver higher, so he goes very deep down a rabbit hole that is insane to think. First, starting at $22.75. I don't think that that is possible anymore. He never mentioned, he's talking about, and I'm not trying to say this to try to be like a silver pumper. I'm just being honest. We have been sitting at $27, $28 silver for way too long now. Prices have stabilized up here. If this would have all happened within a month or two, then yeah, we could talk about that because that's happened before. But we are in a different time. And on top of that, now you have all of the biggest countries focusing on silver. China was the most recent, saying that they're focusing on silver now more so than gold. And then India also buying 265% more silver, or imported silver from last year. So to say this, along with the upcoming November election and all of these other areas that are all bullish for silver, right? All bullish for silver. To say that this is possible is highly, highly, highly unlikely. If you were to look at it like this, I think it would be swiping out the entire factor of the silver shortage. If there wasn't a shortage of silver and you just went off silver as a monetary metal that was stuck to whatever the dollar or whatever the economy's doing in terms of, like, let's say gold, then this argument could be a lot stronger. But I don't think that this is possible. I'm not saying that gold is going to do this either. I'm just saying that to say that we could see an idea of $20 silver again is highly unlikely for many different reasons. I think there's a better chance that it could go to $35 before it could go to $20. Now, there's, of course, it could easily go past 30 before it goes down to 20 because it was already at $29.90 last week. It was only 10 cents away from $30, which is something else to take note of because, yes, there's a lot of resistance at $30. And he mentions that that's been there for a while. But that's actually the point that makes it more bullish because every time it's tried to touch 30, it shoots back down dramatically, sharply, intensely, all the way back down. But these times, or this past time, it didn't. It stood up there, which means prices are stable, which means people are buying. When it starts dipping down, they keep buying because they see silver's value now. Whereas before, it would have went way back down because that was just some overbought territory spike rally that was, a false flag. It was really nothing. But now people are starting to understand silver's value more than before. And that's just my opinion. I could be completely 100% wrong. That's just my opinion. So anyways, central banks around the world continue to flood the markets with liquidity, and that will be one of the main drivers of not only silver, but gold to go higher, and the typical precious metals trade. At this point in time, I think it's difficult to short this market, but I would not be a buyer quite yet either. I believe that this is a longer-term cycle to the upside, and therefore you have plenty of time to find value and take advantage of what should be a massive move higher over the next several years. So I am glad that he's realistic. This is not supposed to be a get-rich-quick scheme. I don't talk about selling silver if I ever do for another 10, 15, 20 years. Like, why? What am I going to do? Sell it next year for $100 an ounce? And then what? Just live a fiat lifestyle again? No. Like, the dollar's worthless. Like, putting fake money into real money and then putting the real money back into fake money as the fake money is even weaker, then that is just contradiction written all over the place. So here's another interesting chart we got to look at, because they go into some expected scenarios, some prices to look at. So these are for the people that like numbers. So here's a price analysis, and this was from today, actually, or yesterday, depending on when I posted video. So expected scenario. Silver price successfully reached our awaited target at $26.90 and found solid support there, representing the 38.2% Fibonacci correction level for the rise from $22.26 to $29.78. Clear positive signals through stochastic support the chances of starting an intraday bullish wave in the upcoming sessions, targeting initial testing at $28. Expectations lean towards witnessing positive trades today. However, any break below 26.90 will halt the positive scenario and push the price to achieve additional bearish correction with the new target around 26. So here's the trading range between 26.70 and 27.50. And now we could go into what silver's actual price is in this moment in time, which is 27.12. So it's looking like, or 27.22. So it's looking like we still have quite a bit of a drop to go down if it were to break below there. You can see this is the 1 week chart. Here is the 1 month chart. So yeah, there's where we saw it up to $29.90. Oh, it actually broke above it, went to $30.44 at one point. So yeah, anyways, I'm going to wrap this video up here. Hope you guys had a great day, and make sure you subscribe because I do post daily videos. Thanks for tuning in. This is Silver Slayer. I will see you guys tomorrow. Peace.